The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. And so checking things out right now, the markets are pretty flat. So we got the S&P is up a couple points. We have the Russell up 1.5. We have the NASDAQ up 13 points. We have the Dow up, actually down right now. So we got the Russell is actually down a 1.5. We have the Dow down 30 points now. And looking over at copper. Copper right now is down about 1/3%. We got gold up just a few dollars. We got silver up about 1/3%. Not a big move there. Natural gas moving big, down 2.75%. We got oil right now down over 1%, down $1.37. So oil inventory day. We'll go through and look at that here in a moment. We got corn is up a few whole ticks. Soybeans currently just down a couple dollars. Euro dollar is down 7 pips. Aussie dollar up 36. Pound dollar up 72 pips on the day. We got the dollar franc is down 1. We have the dollar CAD is currently down 43. Dollar yen is up 15. Aussie yen is up 28. Euro yen is up 12 pips. Pound yen is up $1.02. And we got the euro pound down 20. It's not cents, yen, right? But anyways, euro pound is down 25 pips on the day. All right, so that gets us caught up on where everything is in the markets, where all the markets are currently trading. And let's go ahead and hop over and check out just some of the news information. So I go through this each and every day with you. We walk through different plans, talk about what's been happening and what's coming up. So that way you can be ideally prepared to take advantage of it. And pulling up my my little stats right here. I get these ready throughout the week every week. And it looks like what we have for... There we go. I was just trying to get the right view. All right, so for yesterday, we had the Aussie pound report. And so let me grab a Aussie chart for you. We'll look at that one and go into it. And pull that up. Back this on down to 5 minutes real quick. And then we'll go in and look at the details of the report. So not Aussie pound, but Aussie GDP. I was looking more at potential iron Condor butterfly on that trade. Would have worked out really well if he did the trade. And we definitely have some movement, but it's it's one that you do into the news. Looking for about an 11 o'clock expiration, because just basically we want to maximize that premium, allow the market to explode and do its thing, and just hold on to it, let it move around, and see what it does. The average move is about 50 pips. So what do we get now? High to low. We got a pretty decent move here. High to low. Got about 62, so a little above average. Now that was high to low. Now if we go, from pre-release, so right over here, right before the release, if we go pre-release to high, we got a move of about 44, and then we got the remainder of that balance moving on down. The important number when you're doing an iron condor, okay, which means you're buying the spread below, selling the spread above, is right here. Where does it expire? And we literally had an expiration that was 4 ticks off of the pre-market price. And that's what we're expecting. We're expecting in the end, not only does it have a limited range, but that it'll come back. And it did. And so you go in and you put a binary to, sell actually above the market. Okay? And not a binary, but a spread. And you put a spread to buy, so right down here below the market. Yesterday I walked through how to do this step by step. Make sure you go back and check out the March 4th archive over there on Tiger TV. And but buy here, sell here, and then you make max profit. It expires right in the center. You get about $35-40 for the trade. So you can make up to $40. The closer you are to the center, the better. It's 4 ticks off, so you're looking at about depending upon what exactly the price you got filled at, you could get in as early as 6, okay, which would have been ideal because that's, again, more premium, more time. Then you'd be looking somewhere close to making about $35 on the trade. And, looking at basically a 1-to-1 risk-reward ratio, you would have had a stop-loss 80 pips up and 80 pips down. And as we talked about earlier already, the market moved 62. So you would not have hit your stop. Market came back down, and you basically got max profit on the trade. So I saw some traders take advantage of that this morning, or last night, and did rather well. Now this morning, we also had the Atp Nfp report that came out, okay? And so looking at that, the sort of the same thing, hopping on Aussie dollar, also dollar yen. Usually not extremely volatile when this report comes out. And so we were looking at the same concept, okay? You also could have done a dollar CAD, dollar franc. Pound dollar moves quite a bit usually on this report. So we may shy away from that one. And, you could enter as early as, 7 and go as late as 11, okay? So if you entered at 7, let's just look at the end result, and you held till 11, right there, 6 pips difference. So you're looking at, again, just assuming you're getting about $40 on the trade, made about $34 on the trade. And as far as, your drawdown, like how far did it go? 19 pips. Perfect Iron Condor. All right, so great Iron Condor week. A lot of the things happening this week, very, very good for Iron Condors. And then we also had the Bank of Canada had their interest rate release coming out. And one of the things I pointed out is like, hey, if it's too expensive, make sure to Iron Condor it. And let me see here. I know I had a trader or two. Actually, they were posting some of their trades. Let me see if I can find one of them. And he was, testing this out. It was new for him, starting to learn how to do the Iron Condors, put them into practice. And he posted a trade a little bit earlier about doing that. And I want to say he was doing on the dollar CAD interest rate. And let me see here if I can find it. If I can, then I'll share it with you. There we go. Okay. So, yeah, he's doing a butterfly right there. Actually, he did it on he did good, too. He went in and did a butterfly on that one. And I was trying to see if I could find one other one because I know I had a trader do a dollar CAD interest rate one. But if I find that one, I get all these, comments, notes all the time. Traders following the trades, and very happy with their results. But let's go ahead and let's check out some of the other ones, and I'll come back to that one. But again, the dollar CAD, I noticed, hey, you know what? May work out, but also may be too expensive. So if it's too expensive, which really means, anything more than $40, then you could be a lot better off doing a 45 at most. But even with that, you may be better off just doing a simple Iron Condor trade on it. And it comes out at 8. So let's say you started at 7, went to 11. Okay, that would be the extreme entry time. Okay, and right here, 15 pips. So definitely a profitable Iron Condor. What about if you tried to do a straddle on it? You got about 41 down, and that took a long time. Basically, you went for about basically a break even. And right there, of course, that time, it didn't take a long time from when the release happened, but it took a long time from just entering at 7. But that was right when the release happened right there. You got that move up, move down, about a 64 pip move up and down. But again, a great Iron Condor. And you always want to make sure that you're looking at these and going, hey, is this a trade that I might want to consider actually just doing Iron Condors? And I'm getting more and more and more in favor of doing these Iron Condors and a lot of these news announcements, unless they're ones that just consistently have the big moves, okay? And even when they have the big moves, okay, check this out. Let's say I hit my 1-to-1. They move 80 pips, like expected. A lot of times they don't end there. So they'll come back, which means an Iron Condor would still be profitable if it gets back in that, say, original 40, 50 pip range, okay? And let's see here. The next one we had on the list was, we also had the ISM report. You could hop in on that one. Again, that was another Aussie dollar, dollar yen one. So we'll look at Aussie dollar, then we'll look at dollar yen on it. About a 40 pip move. looking to get in pretty close to the news, most likely when the other news get out of the way, and then hopping in some 9:55, probably looking at an 11 o'clock expiration. And so if you did that, we hopped right in. See what kind of move we got. Close to close here. I had to redo that. Close to close. Like 4 ticks. So perfect iron condor on Aussie dollar. Like I said, you also could have done it over on dollar yen. And right over here, we go in again, 9:55 to 11:20. So that one would have been about a $20, $15 to $20 profit on that trade. So I did on dollar yen, but Aussie dollar is really being perfect for iron condors this week. All right, so what about tonight? We got another one coming up tonight. Same thing. 6 to 11 on the retail sells. It can be a big mover, okay? But more often than not so much. And again, often still, it does come back. So again, Aussie dollar retail sales comes out tonight, and that release is going to be at 7:30. Let me find the information on that. So yeah, we got a 7:30. We got a release. We have an expectation of 0.5. And when this move happens, you usually get a spike up and then a pullback, usually pretty fast. Okay, so just sort of giving you sort of a market profile on this. I'm seeing a spike. It will spike really quick, and then it'll pull on back for us. And let's see, like we got on this one I'm looking at, it moved up about 45 pips up. But then it pulled back by 11 to about 35. That would have been a small, like $5 profit. The one before that, though, pulled up, ran back, and by 11, we're down like 14 ticks. Ran up, came back by 11, about 20 ticks, so about $20. So basically, just over and over, looking at this trade, I was trying to decide, what's going to be better on this. And from what I could tell, over and over again, I'm better off. Quite simply just with a iron condor. And I'm trying to find ones even that really break that 40 pip range by 11. Okay, that'd be a big key. And because one thing I noticed, you may have noticed if you've been trading these, Aussie can sometimes, except for a few reports, can take its sweet little time to get somewhere. And though the move may be huge, it may be a 100-tick day on Aussie, when that report comes out, sometimes it doesn't move more than 30, 40, 20 ticks. And so I'm finding more often than not my risk is really low. My profit is decent or really high doing an iron condor on these trades. So that's definitely a setup to look for tonight at 7:30, getting in at 6, looking at the 11 o'clock expiration. All right, stay there. We'll be back right after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White, and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so, again, we were looking at that trade there. Now let's go ahead and check out. So that's the one that's coming up tonight. Okay, so the retail sales report. Tomorrow we got the pound interest rate. Big mover. Okay, usually a decent mover, but okay, going to add the but in there. But you go in and look at it, and a lot of times the premium is too expensive. Okay, or here's the other issue I've been learning as I've been doing this more and more over time, is you don't really get the move right away. The reason being is a lot of times what will happen is it'll sort of pop off their announcement and their statement, but then it'll wait for the news to come out on the euro dollar, the ECB interest rate, which follows up after that, and even more importantly, it'll wait for the ECB press conference before you really see a move when you get it. And so I'll tell you right now, more often than not, I've actually much more favoring lately, okay, looking at doing the iron condors. And that, again, that's a short-term one, okay? So I want to be in this thing and out of it pretty quick. The pound interest rate, get it as early as possible. But the pound interest rate tomorrow is going to be released we don't expect any kind of change, but it'll be released at 7 a.m. Okay? Now, at 7:45, the ECB interest rate will be released. Usually not a big move on that. Usually the big move, unless there's a surprise, the big move is the ECB press conference at 8:30. So I really want an 8 a.m. expiration. And so at 6 o'clock, the 8 a.m. start trading on the pound dollar for spreads and for binaries, but I prefer the spreads for iron condors over the binary butterflies. And with that interest rate coming out, it'll probably be pretty expensive and it'll be pretty narrow, which is good. And so I'll hop in on that trade and just to go over some basic stats, just over the last 12 months, okay? Like how far did it move by, 8 a.m., okay? Last report, we were down 19 pips. So if you got more than $19 of max profit on the two sides, you made money. The one before that by 8 a.m., 33. Okay, and I'm expecting you're probably going to get somewhere between 40 and 50 at least. And we were at like 4 pips, the one before that one. Then 8 a.m. before that, we got 15. So to subtract 50 basically from whatever number I give you, 40 to 50 from whatever number I give you. 27, so that'd be a 23 profit. 42, so that'd have been about a break-even one. And then, okay, so here's one that probably definitely lost on you. $71, that'd been like a $30 loss. And this is when we had like a little crazy stuff going on. This was all the way back like in August of last year. And there was just some really crazy volatility happening in the pound. We haven't had that lately, okay? So that one and the one before that would have lost if you had your stop loss set in. Basically you'd be like at a 1-to-1, okay? You wouldn't actually even hit your 1-to-1 on that because it just would have expired out at about a $30 loss or a $20 loss, depending on what your profit was. If we go down to now, July was insane. It was super fast. That one moved it was like 150 pips. Okay, so one of them so far, massive mover. Going back to June of last year, we got closes 0.2 difference, so like max profit. Going back to May, closes 3. Going back to April, that one, about 76. So that would have been right close to the max loss on that one, like the 1-to-1. Going back to March, about 58. So about a 50% loss on, if you had $50 risk, you probably lost about $18 on the trade. So we really had 2, maybe 3 that, hit our 1-to-1. The rest of them somewhere, on the most part, I think we had 2 that had like max loss. We had 1 that had like a 2 that had like a 50% loss. And then we had probably over half a dozen that were very close to max profit, and another half dozen that were about, not half dozen, but let's see, 6, that's 10, so we got 2 left that were about 50% profit on the trade. So net result, if you're doing it consistently, and that's one of the big things I try to remind people, you got to compare report to report. You can't go, I had 3 news trades this week and they won, or I had 3 news trades this week and they lost. Therefore, news trades are great or poor. You got to compare pound interest to pound interest to pound interest to pound interest. You can't compare pound interest to Aussie retail sales to U.S., NFP. So we'll go through the other reports when we get back, but that looks like I'm really probably leaning again towards the iron condors on that one too. All right, we are back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so going through, like I said, we're just walking through the interest rate announcements that are coming up tomorrow. And so one of the questions I get is, well, what about if I do choose later? Is that good? Is that bad? How would it have done? A lot of times it will move because you get that ECB interest rate going. So let's say you bumped it out to 11 a.m. It'll move, but it won't move necessarily that much. So just to give you some stats on that real quick, you got 34 if you chose the 11 a.m. Okay. We got the one before that, we got 17. So the one before that, we got about 20. One before that, you would have moved to like a 29 pips. So if you got 40, you'd have made 10. If you got 50, you would have made 30, or 20, I mean. One before that, we got 20, 30, 39, okay? One before that, one at 11 a.m., about 30. So you get about 30 pips a lot of times. Going back to August, we're in August of last year, 8. So July, that one would have lost. That lost no matter what time you chose, unless you did straddle or strangle. June moved actually 79 pips, but if you chose the 8 a.m., if you could have pulled that off, it only moved 0.2. So see, that earlier time really helped you on that one. Let's see, 11 a.m. on May, 55 versus 2. So There's a couple times where it definitely did hurt you by waiting. There's one right here, like at 8 a.m. that moved 76. That would have been about a 1-to-1. It kept going by 11, and it ran up like 183 pips that day. So it's one of the the few where it's moved huge, and that makes the average 80 pips. The problem is that average is skewed by one market moving 2 pips and another market moving 180 pips. Okay, so that's why I'm trying to clean up some of the ideas on how to best do these trades. And because I've really been usually straddling or strangling these, and I'm like, man, it's not moving. And so what I'm doing now is I'm digging into these charts and going, okay, I need to pull these stats up in more detail. I'm actually working with an Oracle database engineer and Cameron. He's helping me put together a Forex engine on all this stuff to get all these stats down, but to make it even easier so I can cover even more news announcements and have more stats to put all the pieces together. And I'm actually building them over a 5-year track period and look at like 1 year, 2 year, 5-year stats so I can see the recent trend versus the long-term trend and if it's changing. But anyway, so just to let you know, again, it looks like 8 a.m. is the preferred. 11 o'clock is possible. It'll work out sometimes, and you're not going to get as good of stats. So basically, obviously, it's going to work out sometimes, not going to work out sometimes. But, the 11 a.m., most of the time would have worked out, but 8 a.m. would have worked out even better. So as long as you could get the premium, then 8 a.m. would be the preference, okay? And so if not enough premium, then 11 a.m. is optional. So honor your stops on that because remember, it's going to be wider. It's going to be like 250 ticks wide. So you definitely have to have stops because it's a wider spread than the 8 a.m. is. Okay, because the longer they go till expiration, the wider they are. Therefore, the more max risk you have. Therefore, the more important it is to have that stop in there. Okay, so now let's look at the ECB interest rate because it's an interesting one. When the ECB one comes out, again, that's on Thursday, and at 7:45, and then they have their conference at 8:30, which is usually really the big mover on the announcement. It rarely is the just the rate itself. So let's see the exact times for you. Minimum bid rate 7:45, ECB press conference, 8:30. Okay, and let's see, last time, and we got a pretty good move on this one. This one is the one that I could say I'm more consistently happy with, but we're going to look at it in detail now. And so if it comes out, no matter what I do, now I can enter as early as 7, so I can get in ahead of that minimum bid rate in case they do something. I doubt they're going to be raising the rate. They're not going to be lowering it. I don't see that happening either. So doubt there'll be anything new there. So I get in as early as 7, or I can wait till 8, and get in on the, for the ECB if I'm doing a straddle. If I'm doing an Iron Condor, I probably want to get in before the minimum bid rate because I want all the premium time I can get. If I did that, I'd be doing like a 7 to 9. Okay, so I'm either going to be doing a 7 to 9, or I'm going to be doing an 8 to 10, or I'm going to be doing a 7 to 11. That's really my choices. What I can tell you, the last time it moved pretty big, about 90 pips, and it moved that in a matter of by 9 a.m. Okay, so if I would have chose the one that expired before it at 8, I would have actually made money. So if I would have had one that expired when the rate came out, but before the press conference happened, it would have been profitable. So that's an interesting thing to look at. Okay, so what that shows me is on that specific trade, and I'll go down and I'll look at the ones before to see if this is consistent. But if I would have done an Iron Condor choosing 8 a.m. as my expiration, and then done a straddle choosing 10 or 11 as my expiration, wouldn't really matter in this case because most of the time it hits that profit pretty quick, then I would have been profitable on both of them. So Iron Condoring the interest rate and straddling the press conference. Let's see here. Let's keep going on this one. I'm curious on this. I'm pretty excited about this one. Same thing. If I would have Iron Condored, I would have been profitable. Straddle, about break even on the last report. So if I would have held it to expiration, would have been profitable on Iron Condor on both. Okay. Let's see, the one before that, again, Iron Condor would have worked out great going into it. And then if I went for the, 10, about break even. If I went for the 11, small profit on the straddle. That's all, like, assuming that it's not too expensive. the thing costs, 50 or 60 bucks, then, the profit's going to be really low. Let's see here. One before that. Yep, Iron Condor would have worked again. And then, okay, this one. Okay, this is one where they changed the minimum bid rate. So this one on the minimum bid rate, we actually got a big move first. I was looking at the one before that. So the one on November 7th on the euro dollar, they actually changed the rate. They dropped it from 0.5 to 0.25. And it was a surprise. The market dropped to 125 pips. And it didn't really, by 11 o'clock, it pulled back about 60. So that would have been an Iron Condor that would have lost. And that's because they changed the interest rate. Okay? If we go in on the one before that, in October, Iron Condor would have been profitable, and the straddle would have been profitable. Okay? One before that, September, Iron Condor would have been profitable. Straddle would have been profitable. One before that, Iron Condor would have been profitable again. And straddle would not have been profitable. But Iron Condor on that. For that, Iron Condor profitable, straddle profitable. For that, Iron Condor profitable in June. Straddle also very profitable. Let's see here. We had another change here on this one. Iron Condor profitable. And then straddle profitable. Let's see. The one back in April, Iron Condor profitable. And straddle slightly profitable. It usually holds a pretty good trend, so it does a good job of that. One before that, Iron Condor profitable, straddle profitable. So that would be my combination. So again, to go over that for you, what I'm looking at, what I'm liking is Iron Condor pre-bid rate expiring at 8. Okay? Entering at 6. And straddle pre-press conference entering at 8 and 10 or 11 expiration. Okay, so if you can get 11 and it's not more than like maybe 5, maybe 10, but really ideally, let's say like $3 to $5 on each side at most, I might go for it because it gives you a whole other hour just in case it takes a little bit longer. Most of the time, that little bit longer would not have made a massive difference overall. I'm trying to look through all of them to sort of see. It may have made about a 10 to 15 tick difference. So it really might not be worth it to even worry about the 11s. Yeah, I'm going through. I'm looking at the 11s on here, and I'm just trying to see, is it worth it pushing it for that extra time? And it looks like overall, not really at all. Like we're usually capping out right about 10 a.m. So yeah, about 10 o'clock. So really the 8 to 10 would be your straddle. So as soon as that Iron Condor had expired, you're hopping in. 8 a.m. to 10 a.m. pops up, you're doing a straddle. That would be my trade report on that one. As far as like stats, how far is this thing going to move? What do we expect? And write that down, update my news announcement. We are expecting about a 78 pip move on, and that's really not skewed. It's pretty consistent. So about 78 pip move on it. Again, the only reason I'd consider even doing an Iron Condor on that is if it was just ridiculous expensive, and sometimes I will tell you they are. I went into, I know I've done on the last few like FCM trades and last few like NFP trades. So we'll be talking about that one. I went in and done Iron Condors on them because they were like on the pound, especially they were like $80, and my move expectation was $80. I'm like, if it just stays within the move up or down, I make money. I only move $1 if it goes outside the move per pip outside of it, and that's only if it expires outside of it. So, if it's ridiculously expensive, then that I would still look at an Iron Condor. But if you can get it for a reasonable rate to the 10 a.m. for hopefully somewhere around 40, 50 at most, really $45 probably ideal, 45 or less, then that's a decent trade for you on that. Just make sure, just like I taught yesterday, go back if you didn't review that, and I went in and I taught you how to make sure you knew what your take profits were. If you're doing an Iron Condor or a straddle or a strangle, and I walked through this whole example right here, step by step, and explain, break even, what's take profit, what's your 1-to-1 risk reward on a straddle, what's your 1-to-1 risk reward on a Iron Condor. It's not as hard as it sounds. Takes a little bit of practice to get used to, but it's definitely worth it. And it's cool on weeks like this when there's a lot. Some weeks, we have like 1 or 2 trades. But this week is just like trade almost every single day. We're getting a lot of trades. And sometimes like 3 trades. We got like an Iron Condor and Pound Dollar, we got an Iron Condor and Euro Dollar you can do tomorrow morning, 6 to 8. And then we got a straddle you can do right there. And it keeps going. There's more on top of that you can take advantage of. But those are like those are the main ones I'll be focusing on tomorrow. And let's see, one other thing to wrap up. We'll go over a look at oil. And on oil, it's an interesting thing we haven't really pulled so far, but what I want to look at for you, and give me a second here. I noticed I pulled the wrong month. I need to delete that month out of my chart. But it can be sort of a challenging one to trade whenever you're trying to do the news announcements on it. But it has a report every week. And so I've really been wanting to figure out how to maximize that, that value of knowing what that expected range is when that report comes out. Okay? And so now that I'm, calculating expected ranges on like every hour, 1 hour, even 2 hour periods, then I could look at what that expected move is. And based on that expected move, I could see what would be better. Maybe an Iron Condor, maybe a straddle. But I can know, hey, would I hit my 1-to-1 if I were to hit that move? For example, the 10 to 11 hour, the hour where the release comes out, my expectation is 65 pips. Now that's high to low, okay? And we got 98 high to low, but let's look at it. We got right here from open to low, we got 86, and then from open to close, we got 58. So, that would have, either one of those would have worked out great for a straddle potentially, maybe a strangle, like I said. That's the one I'm looking at of maybe starting to really use this to figure out a good way to trade the oil inventory reports. And to get a little bit more, just so we can track, okay, what the actual was 98. One of the things, we're doing, I'm actually working on programming this in, or not me, but guys that I hired to program all my fun trading ideas and toys, is to look at the continuous contract. So that way, because, oil's rolling over every month. So I want to get that maximum volume volatility, built in, and on the highest liquidity instrument. And so I can go back, and I won't be able to look at it today, but I can go back and look at, a week ago on Wednesday. So I'm looking at Wednesday's hour, so the 26th, okay? And on the 26th, right here, we'll go back 10 to 11, about 38 pips. So right there, 10 to 11. And is that right? Making sure I'm looking at the right date. 26. And so we'll wrap that up. We'll get right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Okay, so anyways, but yeah, looking out for a good setup for that. And for the current trade, and looking at the news, because I really don't want to take advantage of this, and also along with the natural gas. And so I'm going to keep working on it, and I will keep you up to date. But I think we can come up with a pretty solid strategy to start taking advantage of this oil and natural gas. Just to make sure we have to be aware of the expected range before it happens. So, and we will, because it'll come out 10. We'll know the 11. We'll know the 11 to 12. And like I said, I'm adding it now, featured adding the continuous build-in as well. But it's still coming out about the same. I went over to continuous, and it's continuous at 68. This is 65. And, you know, most of the time the contracts are going to be very close unless there's some weird, you know, some war breaks out or swine flu breaks out or there's a frost or something on corn. Most of the time, your contract's going to be very closely priced. As far as, you know, 1 month apart. Even on, like, in the indices, I mean, they're like $55. That's the margin. If I buy this month's S&P and I sell next month's S&P and I get an intra-spread margin, I'm going to put up $55 on the entire thing instead of putting up, and that's even like overnight. So, major margin break because really they don't expect them to spread that far apart. So, the reason I bring that up is because that means the price. What's the price volatility difference? Therefore, I need to account for that in my expected movement. And so we are doing that, and I'm pretty excited about it. Just a lot of little bitty pieces putting together. Just proper expectations, and that's what diagnostic trading is about. It's about having expectations based on how other people look at the market, and then saying, how can I take advantage of that? How do fundamental news traders look at the market? How far is it going to move, not move? How can I take advantage of that with Nadex? Looking at statistically, how far does the market usually move? How can I take advantage of that with Nadex or whatever else I want to use, like deviation levels, expected moves? And then going into, technicals, just simply, riding the trends. Pretty simple, I'll just, got some very simple, there's 1,000 different trend indicators out there, but I'll go in and just follow the trend. And, so that's my technicals. And then I got my seasonals. I'll look at, when does something usually move up, when does something usually move down. And that's sort of what even the expected range intraday is for me now. That's sort of a seasonality of that hour, of that day, of the week. And so when I can combine my technicals with my fundamentals, with my seasonals, putting all those pieces together, that's the heart of diagnostic trading, because I have a plan not based on what I think is going to happen, because honestly, that doesn't work that well for me. I'm horrible at having an opinion of what's going to happen. Okay, just I'll let you know. Like if I tell you the market's going up or down, I'm probably wrong. Now that's if it's my opinion. Okay, now if I go, what does the chart say? What do the technicals say? What do the fundamentals say? What do the seasonals say? Then I'm very good at it, because I'm using objective information versus gut opinion, and makes all the difference. So in the world. So whereas, trying to tell you tops and bottoms and everything else, I'm like, well, let me look at a chart. And I can tell you up to this amount, up to this time, because I got to be able to look at those expectations that are objective outside of me to have real, accurate expectations. And helps out quite a bit. Okay, so what about NFP, right? So that's a pretty big one. We got NFP with the unemployment information and all that coming out. Everybody loves NFP. Crazy day. Lots of volatility. Either you love it or you hate it. Okay. Well, I guess time's run out for today, so we're going to talk about it tomorrow. But we'll go into it, and it's a pretty crazy move, and I really enjoy trading it. And I'll tell you how I trade it tomorrow right here on the Diagnostic Trading Hour. Y'all have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.